Hey everyone, welcome back to Corporate Decoder. Today, MicroVision MVIS filed their preliminary proxy statement for their upcoming annual meeting, and I am seeing a big move they are making to try and boost their stock price. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about setting up a reverse stock split and getting shareholder approval for it, which is a pretty common move for companies trying to get back in line with stock exchange rules. So MicroVision is holding their annual shareholder meeting on the 10th of July 2026, and they are asking shareholders to vote on a few key things. The most important one right now seems to be this proposal to authorize the board of directors to do a reverse stock split. What does this mean? Basically, they want the power to combine all their outstanding shares into fewer shares. Think of it like exchanging $10 bills for $100 bill. The total value of what you hold stays the same, but you have fewer pieces. They are asking for the right to do this at a ratio anywhere from 1 for -5 to 1 for -15. This means they could combine every 5 shares into 1. Or every 15 shares into 1. The board gets to decide the exact ratio and when to do it within a year of the shareholder meeting. Why are they doing this? The main reason highlighted here is to regain compliance with the Nasdaq listing requirements. Nasdaq requires a minimum bid price for stocks, and right now MicroVision stock is trading below $1. They are getting close to that, the 13th of July 2026 deadline to fix this. A reverse stock split is a common way to artificially boost a stock's price per S-share. The hope is that a higher stock price will make the stock more attractive to institutional investors and avoid being delisted from Nasdaq. Losing their Nasdaq listing would be a pretty big deal, potentially hurting the stock's liquidity and the company's recognition. Now, this move is not without risks. They warn that there is no guarantee the stock price will stay up after the split. Often the price can fall again. Historically, about half of microcap companies that do a reverse split end up getting delisted anyway. Kodak, for example, did a 1 for 20 reverse split back in 2021, and its stock eventually delisted. For a $1,000 investment in Kodak at that time, holders saw roughly a 40% additional drawdown over the following 90 days, turning that $1,000 into about $600. The filing also mentions that this could potentially be used as an anti-takeover defense, making it harder for someone to buy up the company. If they do the reverse split, shareholders will own fewer shares, but their percentage of ownership in the company should stay the same. For example, if you own 1% of the company before the split, you'll still own 1% after. The number of authorized shares will actually increase after the split because the total number of shares authorized doesn't decrease proportionally. This is a way to give the company more flexibility for future stock issuances. Another key proposal is to approve the issuance of shares related to convertible notes. Back in February 2026, MicroVision issued significant convertible notes worth $43 million. These notes can be converted into company stock. The reason they need shareholder approval here is also related to Nasdaq rules. If they issue too many shares, especially at a price below a certain threshold, they need shareholder sign-off. This proposal is crucial because if shareholders don't approve the share issuance, MicroVision might have to pay a substantial amount of cash instead of shares for redemptions and interest, which could strain their finances. Looking at the ownership numbers as of May 11, 2026, we see that Glenn Davis, the CEO, owns over 1 million shares, making up about 0.33% of the company. The total for all officers and directors is around 3.9 million shares, which is about 1.19%. Big institutional holders like BlackRock own a significant chunk, with BlackRock holding over 17 million shares, or 5.8% of the company. Now let's dig into executive pay for 2025. For Glenn Davis, the CEO, his total compensation was over $3.3 million. This includes salary and a significant amount in stock awards. Simon Biddiscombe, who serves as executive vice chair, had compensation over $532,000. Drew Markham, SVP and General Counsel, had compensation around $1.48 million. It is worth noting that for the 2025 bonus year, both Mr. DeVos and Ms. Markham had their bonuses paid in the form of restricted stock units, or RSEs, which vest over time and are tied to performance goals and continued employment. This section shows how executive pay compares to company performance. For 2025, the compensation actually paid to the principal executive officer, Mr. DeVos, was about $2.48 million. For the other named executives, it averaged around $1.57 million. The company's total shareholder return was 15.39% in 2025. However, MicroVision had a net loss of over $94 million in 2025. This highlights a common disconnect where executive compensation might seem high even when the company is not profitable. The stock price at the end of 2025 was $0.83. Comparing this to 2023, where the stock price was $2.66 and the net loss was lower at $82 million. It's clear that the stock performance has been a significant factor in how executive compensation is valued, especially with stock awards. Finally, they are asking shareholders to ratify the appointment of Baker Tilly US LLP as their independent auditor for the current fiscal year. This is a standard procedural vote. In 2025, MicroVision paid Baker Tilly over $673,000 for their audit services, plus additional fees for audit, related and tax services totaling about $122,000. These are significant fees for an auditor, but typical for a company of this size and reporting requirements. Overall, MicroVision is clearly focused on managing its stock price and Nasdaq listing with this proposed reverse split. The approval of the convertible note share issuance is also critical for their financial flexibility. While executive compensation remains high, it is heavily tied to stock awards and company performance metrics, even as the company continues to post net losses and navigate the challenges of a low stock price. The key question for investors will be whether these moves are enough to truly turn the company's fortunes around or just a temporary fix. Alright, that is our breakdown of MicroVision's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. The research tools I use are linked in the description below. They help keep this channel going. That is my take. Stay decoded.